Hello everyone, I'm Sahil and welcome back to the channel where I'm documenting my journey to financial freedom and also trying to put out everything I learned for you guys who might have similar goals. So if you guys have not subscribed, just go ahead and hit the subscribe button right now. It will really encourage me to do more videos. Anyways, it's a new year and some of you might have just decided to do some sensible thing and start investing provided all the uncertainties that we had last year. And I guess you're lucky because today we are looking at which brokerage to go for and how to get it all set up. So let's hit it up. Okay, so if you want to get started with investing, the step one is to open a brokerage account. Like I mentioned in episode 5, brokers are like the cashiers in the stock market. You pick the stock you want and they will help you with the transaction by taking your money and giving you the shares, or taking your shares and giving you the money. The entire firm of brokers is together called a brokerage. And the sheer number of brokerages available to you in Singapore are overwhelming, from bank brokerages like OCBC Securities, DBS Vickers, Standard Chartered, to standalone brokerages like Tiger, FSM1, and so on. So today, let's find out which brokerage is best suited for you. Now, before we start, just a disclaimer that I have only used OCBC Securities, Standard Chartered, Saxo, Tiger, FSM1 personally, and for all the other brokerages, I would be using the information available online to compare them. Okay, so there are 3 main factors that you should look out for when choosing a brokerage account. Number 1, it's the account type, whether you are able to link your account with CDP or it's just a custodian account. Secondly, it's the commission, how much it costs for you to buy and sell your investments. And lastly, it's the user experience and reliability. So I have not used all the brokerages, so I can't give you a concrete answer on the user experience. But for the ones that I have used, I will give you some comments here and there. And also the reliability, like it's an important factor because you have seen what happened with Robinhood, right? They unethically suspended a transaction on GME and AMC stocks. Like, this is something that you wouldn't expect from a reliable broker. So yeah, that's very important, but you have to kind of do your own research on that. I will give you some factors and then you can consider on that. So let's start off with the first factor, which is the account type. So like I mentioned, there are 2 main type of accounts in terms of where your shares are held, the custodian account and the CDP linked account. In a custodian account, when you buy shares, the shares are held by the brokerage on your behalf. So you are not the legal shareholder. However, you reap all the monetary benefits from that stock, like all the dividends, all the capital gains are yours, just that it's not under your name. Now, since the shares are under the brokerage's name, they are part of their assets. A lot of people fear that if the brokerage goes bust, they will lose all their holdings. It sounds risky, and in a lot of terms it is. However, in Singapore, the Monetary Authority of Singapore exercise very tight control over all this financial industry and all its player. So the brokerages themselves are legally required to separate all the clients' cash and assets from their company's own. So rest assured that nothing is going to happen if the brokerage goes bust. Also, in this type of account, all the communication with the company is through the brokerage. So anything that might require your vote on will be pumped down by the custodian account to you, and you will make the vote. However, this type of service or the feature is not offered by all the custodian accounts. For all foreign traded stocks, you have no choice but to hold them under the custodian account. However, for Singapore traded stocks, and only for them, you can have them directly under your name, just like you have your house under your name. To do this, you have to open a Central Depository Account, or CDP for short. This CDP account is operated by the Singapore Exchange, and it's on top of your custodian account. So you have to link your custodian account with the CDP account and transfer your shares from there to the CDP account. Not all the brokerages offer this feature of linking your account with the CDP account. We'll talk about this in a minute when we compare all the brokerages. But for now, just know that the CDP account is like a safe where you just store all your shares under your name, and you get all the rights that come along by being a legal shareholder to the company. Like you can go to the annual general meetings and you can vote for the company and so on. I will leave the link to the sign up page for the CDP account in the description below. Just go ahead and sign up. It doesn't cost you anything or doesn't take much time, and it's always better to have it than not. But you might ask, like, isn't it always better to just store your shares under your name? Why would you even go for a custodian account? The reason is that it's usually, I would say, cheaper to trade with a custodian account than through a CDP account. Now that brings us to the second factor in comparing the brokerages, which is the commission fees. So in executing any trade, which is buying and selling, you would have to pay certain fees. The difference lies in the commission fees for individual brokers. So now let's compare them. In total, I will be comparing these 15 brokerages. However, if I have missed any one of them which you think is good, just list them down in the comments below. Not eToro though, because I have intentionally not included eToro since they are not regulated by Monetary Authority of Singapore, and their pricing structure is a bit shady, which I would not like. I would actually want my brokerage to be honest and upfront with their dealings. It's very, very important. Boils down to the reliability again. So eToro, in my opinion, is just shit broker and you shouldn't go for them. Anyways, we'll be comparing these stock exchanges separately for individual markets, Singapore, Hong Kong and US. They have different pricing structure for each of them, so we can just pick a winner for each market, yeah? Firstly, for Singapore listed companies, Interactive Brokers, Tiger Brokers and Saxo Market Capitals are cheapest in terms of commission. However, these three brokers only offer custodian accounts, so you can't link them with your CDP account. If you want to go for a CDP linked account, then go for FSM1, and I personally recommend going for FSM1 because the commission is not all that different. I mean, percentage wise is the same. The only difference is in the minimum commission, which is not that big of a difference anyways, and you get to store your shares in your CDP account, which is great, right? But there is also a transfer fee of $10.70 charged by SGX for transferring your shares into a CDP account. However, FSM1 is waiving off this fee until further notice, which is great. If you don't care if the shares are under your name or not, then you can just go for a custodian account with the Tiger Brokers or Interactive Brokers. One thing to note here is Interactive Brokers have a minimum maintenance fee per month of $3 if you're below 26 and $10 if you're above. However, this maintenance fee can be adjusted with a commission for that particular month. So if you're a trader or if you're an investor who's like buying every month, then just go for Interactive Brokers because most likely the $3 or $10 will be adjusted with the commissions that you would be paying. On the other hand, if you have invested more than 100k with Interactive Brokers, they will waive off this maintenance fee anyways. But I believe everybody who's watching this video is just starting up with investing and they don't have 100k to invest. Also, I don't think any trader is trading in the Singapore market, so we just left with long-term investors. And for you guys, I recommend go for Tiger Brokers because the difference in the commission is not that big. Moving on to the Hong Kong market, we have Tiger Brokers, who is a clear winner with minimum fees of 15 Hong Kong dollars and maximum of 0.06% of the contract value. 15 Hong Kong dollars is super cheap. It's like $2.57 Singapore dollars. Amazing. Okay. And now the next one is US stocks. For this, TD Ameritrade comes up to be a clear winner with zero commission fee. I hope they had it for Singapore and Hong Kong listed companies as well. But anyways, there are some promos going around. So Tiger Brokers is offering 5 free trade on Singapore and Hong Kong listed companies, plus a free stock when you sign up with them. So if you want to sign up with Tiger, FSM1 or Saxo, feel free to use my referral link in the description below. Yeah, this will really support my channel. But for whatever reason, if you don't like me or don't want to support this channel, just go find a friend and use his referral link or code. You both will get something out of it, so why not, right? So now let's further look into the top brokers that we have chosen above, Tiger, TD Ameritrade and FSM1. So in terms of regulation, Tiger is regulated by US, Australia, Hong Kong and New Zealand regulators. TD Ameritrade is regulated by US and Singapore. FSM1 is regulated by Singapore authorities only. For market access, you have Tiger, which is a clear winner, gives you the most access. For TD Ameritrade, they only cover US markets, and if you are a trader, you're trading in the US market, just go for the TD Ameritrade. FSM1 covers all three markets that I'm personally interested in. Yeah. So for account opening time, Tiger and FSM1 are pretty fast, everything online. For TD Ameritrade, I've not personally opened an account as I mentioned before, but I've heard that they take a freaking long time, like anything above 3 months. The minimum was 3 months. People are waiting for like 10 months for just getting the first response, yeah? So they are quite lazy or slow in that terms. But I think it would be worth it if you're like a trader or something with zero commission fee. It makes a big difference. So some additional pros for each trader, like for Tiger, you have pre and aftermarket access. For TD Ameritrade, you have fractional shares. For FSM1, you can, like I mentioned, link your account with CDP and transfer your shares into a CDP account. You can also actually trade using your CPF OA. So I was using Poems for my CPF investments, but from now onwards, after comparing everything, I will be using FSM1 to do my CPF OA investments. So some cons for the three brokerages. For Tiger, there was one issue that I encountered, which is funding of the account. So yesterday I was like transferring some funds into my account, and it didn't happen until like 12 hours. It didn't show up in my account, and I tried to contact their customer service. Nobody would pick up calls. Like I waited 1 hour, nobody picked up. I went through their online chat. I don't think anybody is sitting at the customer service desk that day, but it's Friday actually, so yeah, their customer service should be open. But then in the end, I sent an email to them and got a response within an hour. So, and my funds got it showed up in my account. So yeah, but then again, it could be because of all the issues happening with GameStop and AMC. Like they might be having some troubles with that. It was on the same day, so yeah, could be, I don't know. For TD Ameritrade, there is a withdrawal fee of 25 USD, and for FSM1, I think the app is a bit too much, like a bit too confusing. There's too many things in the app, especially for beginners, but you'll slowly get a hold of it and it will be fine eventually. So just to add on, for Tiger Brokers, right, I saw a lot of people had concerns that they mentioned online about Tiger being a new fintech startup, and they were worried about the reliability. But just to let you guys know that Tiger Brokers actually don't hold your shares under them for the custodian account. They actually use services by DBS and Interactive Brokers. So any shares that you purchase from any Hong Kong or US shares you purchase are held by Interactive Brokers, which is regulated by US, SG, UK, Australia, and Hong Kong, Canada. And it's a very good brokerage overall. So don't worry about it. For Singapore stocks, is held by DBS, which again, I think we all can trust, I guess, yeah. So your holdings are pretty safe, I would say. Now I have covered most of the things. Now the choice is yours, which broker you want to go for according to your own needs. Once you have chosen your brokerage, right, you just gotta go to their website, sign up for a brokerage account, which is very easy. You can just use your SingPass and they will pull off most of your information from there. And you just need to fill a few other things and you'll be all set up. Anyways, once you have signed up for the account, you would have to fill a customer account review form, or CAR for short, if you want to invest into overseas listed stocks and ETF. This is just to see that you have a basic understanding of how all the investing shit works. Once you have done that, you will get access to the foreign markets. Once you have settled that, you can move on to fund your account and start trading. I will walk you through this process later in the video, taking an example of Tiger Brokers since it's getting so popular. And yeah, so if you're interested, just stick along until the end of the video. But before you get started, I recommend that you go on and learn a bit more of fundamental investing. And I sincerely hope that you are not pulled into investing because of all the Wall Street bet drama out there and people making shit ton of money. It's not gonna last very long. Definitely, everybody knows that, and some of the people will be the bag holders and they will be drawn and they will lose a lot of money as well. The few things that I feel is very important is to know what kind of investor you are. There are three types of investors out there: long-term investor, the trader, and the victim. So long-term investor is definitely trading on the fundamentals, and they're buying good companies at fair value and holding the companies for a long term, riding all the ups and downs along the way, and eventually they see an increase. Good company, yeah, they will increase their revenue, they will increase their profits, and with the profit you will see the stock price rising with time. For a trader, he's generally trading on charts, and yeah, so they are just looking for momentum, and they jump in when there's momentum and more volume in a stock. They will ride along and they will sell, probably in short term, within a day, a month, or a few months at max. And then there's victim, right? A victim is a person who goes into the market thinking that is a long-term investor, but once the market hits him, he's the first one to trade, and like they will go into a recipe of buying high and selling low all the time, which is tragic, really. So the gist of the thing is that don't be a freaking victim. Know if you are a trader or a long-term investor. If you are a trader, stick to your strategy. If you are a long-term investor, stick to your strategy. And yeah, don't get affected by short-term losses.
Alright guys, this is the Tiger Brokers mobile app. So the first thing you need to do is to fund your account. For that, you will go at the trade button at the bottom. Once you go there, then you press deposit, and it will give you these few options of making your deposit in SGD, USD, or HKD. Since you're in Singapore, your bank account would be in SGD, so you just go with the deposit with SGD. So over here you have these three options: DBS, POSB, or other Singaporean accounts. DBS would be faster because Tiger Brokers account is in DBS. For this example, let's just choose the other Singapore bank accounts, and here you see all the details that you need to use to do a bank transfer to Tiger Brokers. So once you have done the transfer, then you can go to the funds limited, inform Tiger to check. Tap on that, and from here you can just put in all the information. Firstly, the currency that you transferred in, which is SGD, then the amount, let's say $200, and then the bank account that you used to transfer the money. And lastly, you have to upload the transfer proof. This is the confirmation screen that you get once you have done the transfer on your bank account. Just take a screenshot and upload it over here. Once that's done, just submit the deposit notification, and your money usually would show up within 1.5 hours time. So to check if the money is in, you will receive an email, but you can also check it over here. Go to the accounts tab and the cash over here. So you would expect your SGD cash to move up by $200 since that's what we transferred, right? All right, so yeah, so that means the money is in. The next thing you need to do is to just go ahead and buy your shares, whichever you like. So if you want to buy in the US market, then you have to change your Singapore dollars to USD first. And if you want to trade in the Hong Kong dollar, similarly, you got to change your SGD to HKD. To do the exchange, you can just tap the exchange button over here. If not, you can go to the exchange tab over here. And yeah, just put in the choose the currency you want to transfer in. Let's say we're gonna transfer HGD to HKD, and then you just put in the number, $500 or so, whatever you want to exchange, and then you can press the start exchange. It's instant, so you will see your money be exchanged within that time. So now you can buy whichever stock you want to buy, and for that you go to the trade button. Then you can pick your stock, whichever you want to buy. Let's say you want to buy JD, right? So JD would come here. You can add it to the list, and then you can choose buy or sell. And yep, The other way to do it is to go to the tab over here at the bottom, and over here you have your wish list which you have created. See that magnifying the search icon over here, just tap that, and then you add in the company you want to add in the wish list. So you go JD, and on the right hand side you see all the tabs, so just press the heart button. It will be added to your wish list. Since it's yellow, that means it's already in my wish list. It's over here. So to trade it, I'll just tap on it. Here's all the information about the stock itself. You can get all the news that is on them. All this information is pulled out from Yahoo Finance, but I don't use Tiger Brokers app to do my research, so it's just sort of a gimmick, but whatever. Now you can you're convinced you want to buy it, just press tab, choose you want to buy, sell, close, or buy warrants of it. So we'll buy the stock, and you can see the direction, confirm it's buy. You can switch it to sell as well right here, and then you have to pick the type of order you want to place. There's a number of type of orders. The main ones are limit order and market order. Limit order is like you set the price, and when the stock drops to that price, the order will be executed. Whereas for market price, to create it, it will just execute the order on whatever the stock is trading at that very moment. All right, so for limit order, let's say we set the price at $3,405, and then you see for the quantity is the number of shares that you want to buy. It says that it's minimum 50 units, so that means minimum 50 shares. This is because Hong Kong exchange you have to buy in lots, and the minimum lot size for JD is 50 shares. So you have to buy in a multiple of 50 shares. For US stocks, there is no you don't have to buy in lot size, so you can just buy it 1 share, 2 shares, or 3 shares. Okay, so let's say we choose 50, and then you can see the total amount at the bottom in the yellow color over there. This is including all the fees and everything. Okay, then you have to choose if the valid period, which is either day or GTC. For day, that means that if the order doesn't get executed within that trading day, it will be automatically cancelled. For GTC, it will just stay, the order will stay placed until it is executed, or you go ahead and cancel it yourself. Once you have decided which one to go for, let's say GTC, then you just go ahead and place your buy order. So once the buy order is placed, you can check it at the trade tab under the daily orders. So your orders that are not executed yet will appear here. Once the order has been executed, it will move into your holdings. Like I have JD over here, and yes, you can check the details of your transaction under the Me tab. Go to the top corner. You have that messages icon over there, and go to the transaction message, and you see that I bought JD yesterday. So I have all the details over here. It was a buy order, limit order at $345. So once you have done the transaction right, you can see over here JD, and then you get a little bit of more information. 50 shares, $345.8 is the current price, and the cost to me, including all the fees and everything, is $345.762 per share. All right,
that's all for today's episode. I hope you got something out of it. In the next one, we shall look into the various products that are available to you to invest in a stock market. Like always, if you're interested, just subscribe and stay tuned. Until the next episode, ciao.